A one and a two and a chick-a-boom a chick.
Hey everyone, I hope you enjoy the recording that you're about to hear. This is a podcast I recorded with Shawn Van Dyke, who wrote Profit First for Contractors. Profit First, the original book by Mike Michalowicz, I think is how you pronounce his last name. I had read it, I think last year, and it was because I had several clients reach out to me and say, hey, have you heard of this Profit First book? You know, I'm starting to use this Profit First system. Have you heard about this? And then Shawn really dug into it, and then he wrote this book. So I can't continue to hear it time and time again. I've got several clients that are utilizing the Profit First system. And what we do in this podcast is really just get into the nuts and bolts of it, how it works, what it is, why it may be valuable for your remodeling business. I hope you enjoy the recording. And like every podcast that you listen to, my goal for you is not to just listen to it and kind of nod along and not do anything with it, but rather if you hear something, take action on it, implement it. You don't need more ideas for your remodeling business. What you need is to prioritize those ideas to what's most important and then implement it. So as you listen to this, try to find something to grab a hold of and implement into your remodeling business. Continue working hard. You're doing great, by the way, and we'll talk to you again soon. Enjoy. All right, everybody, welcome to an episode of Remodelers on the Rise. And today I have Shawn Van Dyke with me. Shawn, say hello.
Hello, Kyle. Thanks for having me.
You bet. Glad you could make it. And for those of you who are recording this, so you might be listening to it via audio, you might be listening to it via video or watching it via video. If you're watching it via video, you'll notice that I have my hat on. I did not want to show Shawn up with my beautiful hair. So if you've seen pictures of Shawn, you'll see he's got this miraculous, marvelous, beautiful hair. Not only is it beautiful, but you got the gray running through it so you can charge more for your coaching. Yeah. And I just thought this is mostly focused about you today, not so much about me. So I didn't want to show you up. So I got the ball cap on.
I appreciate that. And if I had known that my hair was going to be my superpower, growing up, I've always said this before, like when I was in high school, I'd like to go back now and talk to those girls that I asked to the prom and say, I know that you don't want to go to the prom with me now, but when I'm 45 and I have a full head of hair, you're going to regret that decision. Mm-hmm. I'm just saying, you could
as they look over at their husband that might look like this.
Yeah. I'm just saying you probably had more dates than I did in high school. I don't know, but yeah, the hair is, when I started this coaching business, I had no idea that I would get so many comments about my hair. And somebody asked me once, they said, well, who does your highlights? Trying to be funny. I said, oh, well, God, that kind of shut them up. So
there you have it. So one of the things I also wanted to kind of mention at the top here is if people studied what I do and what Shawn does, you might say, well, there's some overlap on like the way you approach like the sales process. I believe very strongly that we need to charge for our detailed proposals, our budgets. You do as well. I do a lot of work with my clients related to the financial side of things, helping them understand their P&L and their markup. You dig into that deep. You probably get into a lot of the processes a little bit deeper. I get into the marketing a little bit deeper. Mm-hmm. But we connected a couple of years ago. We've stayed in touch back and forth over the last few years, and I think it's a reminder to you remodelers listening to this is that you could look at this as we're competitors, or you could look at it as we're colleagues. You have a lot of. It's interesting that I like your take on it, and then we'll jump into the Profit First stuff. But it's interesting when I look at my remodeling clients that are really successful, kind of that top 10% in the industry. I often hear that they're on very friendly terms with their maybe direct local competitors. Frankly, they're friends with them, or they each elevate each other's game up, or they learn from each other. And I think it's just a reminder that instead of kind of shying away, trying to be protective of everything, to just embrace that and to be, not to share all of your trade secrets, but be willing to help and to share and to make sure you're talking well about everybody. So I just wanted to kind of throw that little message out there. I don't know if you had a comment on that too.
Yeah. I've always said that if contractors were better at running their business, then I wouldn't have a job. And I don't mean that in a negative way, is that they just have spent their early lives in developing their business focused on the craft. and they didn't learn the business side of it. So there's plenty of contractors out there that need help, not because they're not capable. It's just a different skill set. And when they realize, oh, now 20 years into it or 10 years into it or even 5 years into it, I've got this business here. I thought I had a business before, but now I see I need all of this other help. On the financial side, on the system side, and I need to get some help. I don't want to work for everybody. I can't. There's so many contractors out there that need help. So I'm glad to connect with other professionals like you that are doing similar things in coaching and helping contractors in whatever aspect of their business. Now, I'm not a marketer. That's not my specialty. I help my clients with their marketing in the fact to try to help them tell a better story and put that out there. But I'm not the guy that's going to do the split testing and run email campaigns and I do all of that for myself. But I leave that up to the professional marketers. Same thing as when I'll teach them about the financial side. Then I want to get them hooked up with a bookkeeper or with a CPA that can take care of, because I'm not doing your books and I'm not filing your taxes. And so I just look at it as a collaborative effort with other professionals in the industry, because like you said, I just want to help. I want to help the industry. Yeah.
So I think that's a good thing to start with. It reminds me of, I was big time deep into Hamilton, the musical. So at the end of the musical, after, Burr and Hamilton had been at odds right from the get-go, just undercutting each other, this and that. And after Burr shot him in the duel, there's a lyric in the song that goes something like, I wish I would have realized that the world was wide enough for both Hamilton and me. He has regrets. You know what? I should have been kinder to that person. I should have been nicer to that person. I should have realized that we both can contribute. Same thing for us. Same thing as you think about your local competitors, your local colleagues, as you should call them. Cool. So what I wanted to dive into, kind of the first half of this, is really just the blocking and tackling of the Profit First system, what it is, kind of the format of it, why it works. And then after that, we'll kind of rapid fire through several other questions related to Profit First. Sean and I were, just a side note, Sean and I, before we hit the recording, I was going through some of the other topics, and he went and grabbed his book, because even though he wrote it, there it is, if you're watching on the video, even though he wrote it, he may not remember everything he wrote. There's a lot of pages in here, so you've got it at the ready in case.
Yeah, there's only like 55,000 words in there. I don't have them all memorized.
There you go. So that's kind of what we'll do. But I wanted to also start first by just talking about one of the first chapters you had in the book, Profit First for Contractors, is making sense of financial statements. Let's talk about that just for a couple minutes, of the importance of remodelers, contractors, understanding their numbers, the value of that, and kind of how you see that area of things.
Yeah. So as I explained in the book, that where a contractor is really going to live day to day is their profit and loss statement. So that's at a basic level, that's the foundation of making any profit in your business. And so you need to understand what the profit and loss statement is and what it tells you and what it doesn't tell you. That's also another key, because if you're trying to make profit in your business, there's a difference between revenue, profit, and cash. But a lot of times we use all of those words interchangeably, and we don't know where to go look for those different things. So for example, a lot of contractors that are listening now will say, okay, they probably had this happen, saying my CPA said that I'm profitable, and there's a positive number at the bottom of the profit and loss statement, and that's probably true. And then they'll go look at their bank account and say, but I don't have any cash, or that number in my bank account doesn't match the number at the bottom of the profit and loss statement. So I'm confused. I don't understand. And then a CPA will talk to them about the value or the net worth of the company, and they'll look at a number on the balance sheet. And none of those numbers match each other necessarily, and it can be very confusing. So they kind of toss their hands up in the air and say, okay, I guess I'll just trust my CPA, then I'm profitable.
They're the experts.
They're the experts. Yeah. They have letters after their name, and so I better listen to them and pay their bill.
There is a direct correlation between remodelers and contractors that really dig in and truly understand their numbers and being successful. That if there's one, doing excellent work definitely a correlation between successful remodelers, not successful remodelers. Having a really solid sales process, knowing how to qualify leads, to build know, like, and trust, to close work, definitely a correlation. But I would say the biggest one is when you truly understand your numbers, you truly understand your P&L, you understand how all that works, you understand your job costs of, okay, I was expecting to make this amount of gross profit, here's my actual. You dig into those numbers, there is the biggest correlation between successful remodelers and ones that are struggling. So you mentioned the P&L statement. You've got to dig in, remodelers. You've got to dig in, contractors. You have to understand, you can't rely on your CPA. I thought we were going to beat up CPAs later when we talked about ripping off the Band-Aids, but let's beat them up for a second now. Right? Their mindset is, how can I limit tax liability, this and that. They're not excellent teachers. So when you look at the profit and loss statement and you show, man, there's $40,000 down here in the net profit, you need to understand that if you took owner draws, if you have loans payable that are in the business, those aren't showing up in your profit and loss statement. Those are coming out of the net income at the bottom. And it takes some time, it takes some effort, it takes some digging in to really truly understand how it all works. But man, is it important. And man, once you do understand it, you've wrapped your head around it, it's such a springboard to success.
Yeah, and so that's a great point to say. Okay, let's talk about the profit and loss statement and what it shows, and maybe what your CPA might be telling you, so that you can kind of bridge that gap between. So the way that I explain it in the book is, if you take a look at your profit and loss statement, you've got 4 basic categories for a contractor, and that is income, cost of goods sold, expenses, and net profit. So to focus on the income part, the way that I teach it is to say, okay, your income, your top line revenue, or that's also the price for all of the work. So if however many projects you do, the price that you sell all of those, add them all up, that is your revenue, that is your top line revenue, or that's your income. That is 100% of your budget for any given time period. So let's just talk about a calendar year, January 1st to December 31st. So if you're taking a look at your profit and loss statement for 2018, and you look at that top line revenue or that income, that is 100% of your budget. If you spend more than 100% of your budget during that year, you're going to lose money, or you're going to make a negative net profit. And that can certainly happen in any given year, or if you want to look at like quarter to quarter, you can have negative quarters. Just because you have a negative net profit doesn't necessarily mean it's bad. It's just over a longer period of time, if it's continuously negative, then yeah, you're going to be out of business. So you have to say, okay, well, if we're negative during any given period of time, but we're still in business and we still have money in the account, then where did the money come from? And it usually comes from 2 places or 3. One is it comes from previous profits or previous cash. Yep. From outside of that period of time. Remember, we're looking at from January 1st to December 31st. And if we show a negative net profit, but we still have money in the bank, then that money could have come from the previous.
Maybe we had $20,000 in the account as of January 1st.
Yeah. Yep. Yeah. So that's a possibility. And that cash or that equity or whatever is going to show up on the balance sheet. So that's one place it could come from, is a previous period of time where we built up some cash or some profits. Another place, a lot of times this is where the cash comes from, if we've made a negative net profit or we haven't made any money, is that we're taking it from future money, meaning we've got deposits.
Sean, that never happens. What are you talking about?
No, that never happens. So that money that's come in, those deposits and those other things that we haven't spent cost of goods sold, labor, materials, subcontractors, equipment, or had expenses on, that money could come from there. So that's the other place that money could come from. Or the third place it could come from is from debt. So we go out and borrow money. We haven't done anything to produce this income, but yet now we have an income to the business that we have to pay off, and it can get very confusing. So the way to look
I was really hoping you were going to forget the third. Remember when Rick Perry was running for president, and he had like 3 points, and it was like this big moment. He's like, the first one is this, the second one is this, and then he totally blanked out on the third one. I was really hoping we were going to have a moment but you nailed it.
Yeah, no, that's where it comes from. Previous cash, future cash, or borrowed cash or borrowed money. So the way to look at your profit and loss statement is just say, okay, if I spend more than 100, if I spend all of these dollars at the top, then I'm not making any money. And then you got to realize, okay, so what shows up on the profit and loss statement? Income, we covered what that is. That's just money into the business. cost of goods sold. And for contractors, it's generally, this is painting with a pretty broad brush, but it's generally labor, materials, subcontractors, and equipment. Yep. Most of your cost of goods sold fall into that category. So that's the stuff that a contractor buys, marks up, and sells to the client. And the way that I teach it, if it's not a cost of goods sold, it's an expense. Everything else is an expense. So for example, I'll say, every contractor has a cell phone, but they don't buy, mark up, and sell cell phones, but they need to have a cell phone to operate their business. So you need to take your cost of goods sold and mark them up, buy enough so that you can pay for cell phones and computers and tires on the truck and fuel and all of these other things. If it's not a cost of goods sold, it's an expense.
I like that.
So now that we've dealt with that, everything else, then we're left with some net profit. And again, that's going against profit first. We'll get into that in a second. I don't like to say the money left over is net profit. But then you have to realize, well, wait a minute. If I take owner's draws, for example, those don't show up on the profit and loss statement.
Right.
That's out of the equity of the company that shows up on the balance sheet. But if that's how you compensate yourself, then that net profit at the bottom isn't actually accurate. The other thing it doesn't show on the profit and loss statement are some tax liabilities and some loans and some assets and some other things. So and that's where
even if we pause right there. So that's if you're listening to this, and you kind of got lost there. There's several remodelers, contractors listening to this that are following, tracking perfectly. Like, yep, I understand that exactly. They've studied it. They've dug into it. There's other ones listening to it going, man, you kind of lost me there. What do you mean it's not showing up in that profit? There's so many resources out there, whether it's Sean, whether it's, some of my resources, whether it's other resources that are out there, dig in and study it. But that was a good overview of kind of the profit and loss side of things, of starting to understand the numbers. Anything else you wanted to tag at the end of that before we scoot to the next part?
No, just saying that net profit is open to interpretation, meaning, okay, we have net profit, but what it really is in most P&Ls is net profit before taxes. Because now we have some amount left over. We have to pay our taxes. Where does that money come from? Where does any of the money for your business come from? It comes from 100% of your income. Again, back to that. And that's where profit first really kind of starts. Meaning,
you just made a beautiful transition. Tell us about the profit first system, Sean.
Yeah. So if you're looking at your profit and loss statement saying, okay, 100% of my budget is my total income, but this money shows up in different places on different financial statements, that is accounting. And you certainly need to do the accounting for 1,000 different reasons. One of those being that's how the IRS will make sure that you're paying your fair share of taxes, and so you don't go to jail. So you need to do the accounting. Profit first is not an accounting system. Profit first is a cash management system. So the way to think about that is you've got your accounting system set up. Profit first is a filter that sits on top of your accounting system, and it's a way to view your cash. So the way that profit first looks at your cash is, okay, 100% of your income. That's all the money that you have to spend during a given period of time. But we need to spend it on all sorts of things. And so we want to make sure that we separate out that money so that we can fund each of those things. And in the profit first system, we get into basically 5 foundational accounts. There could be more, but these are kind of foundational, meaning first, we're dealing with the income. So that's one account. Yep. We have we have a bank account that all the money goes into. That's in our income account. And then we're going to filter that money through the income account into various other accounts. And for example, you're going to have a profit account. And in the United States of America, when you make a profit, then you'll pay taxes. So that's another account.
Did you say the United States of America or America?
America. I say America, not hashtag America, anything like that. Okay. So we've got income, we've got a profit account, we've got a tax account. Then we're going to take care of the most important employee. That is the owner. So most contractors are not paying themselves enough to run a sustainable business, meaning if the owner/operator gets hit by a bus, they aren't charging enough so that they could go out and hire their replacement to come in and do their job. See, yep. You don't have to work in your business in order to own it. You can own the business and have other people work in it. And that's where it kind of gets confusing because most contractors are owner operators and they're undervaluing what they're paying themselves because they couldn't afford to go out and hire somebody else. So owner's compensation is another account. Now that we've taken care of all of those things, the profit, the tax, the owner's comp, and we started with income. So that's the 4 accounts. Number 5 is the operations account, meaning, all right, now this is where we pay all of our bills. Once we've taken care of those other things, then we're going to pay everything out of our operations account. So this is just managing the cash, managing the money within the business. And then when the money goes out from the OpEx account, the operations account, when you pay yourself out of owner's comp or however, when the money goes out, then it passes through the accounting system and it shows up in our profit and loss.
Got it. So emphasize and teach a little bit on the profit first, aspect of it, of taking the profit out of there first and the logic and the reason and the strategy behind that. Yeah.
So here's most accounting principles are set up, and it's called generally accepted accounting practices or principles, GAAP accounting. Here's the equation: sales minus expenses equals profit. So what that means is we focus on selling work and getting income. Then we spend money on the things that we have to spend money on. And we say, okay, whatever is left over, then that's our profit. And profit first for contractors kind of flips that equation around a little bit. It says sales minus profit, meaning we're going to take our profit first and set it aside. And then that's going to leave us with money to operate our business and the expenses. And if after we've taken the appropriate amount of profit and set it aside, we're not taking it out of the business necessarily, we're setting it aside so we don't look at that money, and we're just left with a certain dollar amount left to operate the business. If we can't operate the business off of what's left over, then we don't touch the profit. We change the way we're operating our business. And so the things that are left.
Say that again.
So if there's not enough money left over after we've already set aside our profit, the whole entire reason that we're in business, if there's not enough money left over to operate our business and pay for our expenses, we have to change the way we operate our business. That is your business screaming at you to do something different.
So let's play with like 5%, right? Let's say with 5% net profit. That leaves 95% of your income, right, to run your business, to pay expenses, to pay yourself, to pay taxes. And what you're kind of emphasizing there, and that's why I made you repeat it, and that's because this is such a huge punchline of the whole thing. It's not complicated, right? It is a simple approach. It is changing that little formula of sales minus profit equals this. It's such a critical thing to think, wait a minute, if I take it first. For me, the reason it clicked for me, and the reason I think it's catching with a lot of other remodelers, contractors, is we've all experienced at the end of the month, I'll set aside X amount for savings. Well, at the end of the month, I'll do this. And what happens when we get to the end of the month, Sean?
Oh, it's not there.
It's just not there. It's the same thing for me. If I'm having a flush, solid month, well, guess what? The hunts are for little kids, and my wife and I will probably go out to a nice dinner. I'm feeling good. I got money in the bank. If I'm feeling really good, honey, don't worry about cooking tonight. Let's just go out again this week. Because and by the end of the month, all of a sudden I'm going, man, I didn't fund this. I didn't put money in there. When we constrict that, when we take that profit out and hide it, or if we take that savings out and hide it, it makes us make better decisions. We probably will eat at home and save $50 there. I probably will analyze that advertising a little bit harder to see if I really need to do it. I need to either mark up my work more and make more gross profit, or watch my jobs more to bring them in more profitably. It makes us be better business owners. It forces us.
Yeah, and the profit first model also, it really leverages human behavior. So what every contractor does, and when I teach this, all across the country, when I travel around and speak at seminars in this, and I ask everybody in the room saying, okay, who knows how to read their profit and loss statement? And a couple of hands go up and I say, okay, who can explain how a cash flow statement works? And I say, I can't. I don't know how a cash flow statement works. But then I say, raise your hand if you've checked your bank balance today. And every single hand goes up. Because that's what we know. We don't know the financial stuff, but we know what the dollar amount is in the bank account right now. It's called bank balance accounting. So when we get those deposit checks in, and like you said, we get flushed with that money, we look at the bank account and go, good. I can spend some money. I've got a little bit of room. Now I know I got payroll coming up, so I need X amount of dollars in there. But besides that, yeah, I can go spend some money. And so what Profit First does is leverage that same behavior, but just separate out from one bank account where it's all lumped together. It separates it into different accounts. So we can take a look at, for example, that OPEX account, operations account, and say, oof, I've got profit, I've got taxes, I've got my own compensation. Those are all separate, but I don't have enough necessarily to operate the business for the next. I need to do something very specifically. So the way that it really hits home with a lot of people is we all do this in the bathroom, almost every morning. So what I'm saying is we go and we grab the tube of toothpaste, right? And when we got a full tube of toothpaste, we just squeeze it and go, and we're off brushing our teeth and we're on with the day. Then eventually we will get down to that empty tube of toothpaste, and everybody does the same thing, right? They start squeezing, they take the toothbrush, and everybody has a different method, right? I always have a pocket knife on me, so I'm so lazy as I will slit down the side of the toothpaste tube and I'll stick the toothbrush in there and scrape out whatever I can get. And what we're saying is when the
sounds violent, Sean.
Yeah, well, it is a little bit, but a
little bit of that Kentucky's coming out there.
Yeah, what
Tennessee,
we got,
rather, right?
Yeah, there we go, Tennessee. So what we do is when we're faced with a limited supply, we get by on much less. So having that empty tube of toothpaste forces us to become frugal and innovative. So when so now we take that and we do it the same thing with a shampoo bottle, same sort of thing. Or sometimes I'll say, you could even do it with toilet paper, but we won't go there. But so if we apply that, what we're really dealing here is with Parkinson's law. And Parkinson's law is the law of induced demand, which means that demand will increase to meet the supply. We all like to think that we're pretty good at budgeting our time or budgeting our money, but we will spend as much time as we have allowed. So that's why we cram for tests when we were in school. We've got 2 weeks to prepare, and it comes down to the night before.
Or another analogy is like the day, if we could all be as productive as we are the day before we go on vacation, we'd be beasts, right?
That's right.
What is that? It focuses us down. It's saying, okay, I've got 8 hours today and I've got a ton of stuff to do. It's the same principle with the money side. But if you don't force your hand at that a little bit, if you don't psychologically literally move that money, the profit money away where you can't pay for it, for your subcontractor, for this or that, it forces you to innovate. It forces you to be creative. It's basic, right? It's very basic. That's why it's powerful.
That's what people will try to make Profit First too complicated, because especially if they hear it from their CPAs or their bookkeeper saying, "Oh, you can't do it," or "You're moving money around." No, it's really that simple. It's as simple as this. You do the same thing with the tube of toothpaste, and a lot of bookkeepers or CPAs will say, well, that's not how you do accounting. And you're like, you're absolutely right. It's not accounting. It's cash management. We have a few extra bank accounts. And so if there's a CPA or a bookkeeper out there that's listening and says, I don't really agree with that, then I always say, okay, have you ever worked with a business that has a separate payroll account? Of course they do, right? That's very standard. Like and we fund that payroll account however often, and sometimes we build up a little slush in there. So we're always covered 1 or 2 payrolls, right? That's the same thing as you're taking a certain amount of money and you're sticking it into, you're developing this little stash of cash to say, oh, we have enough for payroll. We don't have enough for payroll. We need to take some action. We're just applying that to the entire business, to the owner's compensation, to the taxes, to the profit, and to the OPEX. So you can have more than those 5 bank accounts, but a lot of people try to make it more complicated or say, well, wait a minute, it can't be that simple, but it really is that simple.
Yeah, love it. Let's pause here. If people are intrigued, where can they go for this lovely book, Sean? This Profit.
They can get it. Yeah, they can get it. They can get it on Amazon, and there's the Kindle version, and then there's also the audio version on iTunes and on Audible. And you can check out profitfirstcontractor.com, and it's got it's got the free resources there for all the tables and figures in the book. And then I have an additional, what I call PFC, Profit First for Contractors toolbox, where they can get some additional training on Profit First for Contractors and how to implement it.
Love it. All right, let's go a little rapid fire through some other. Actually, this first one might not be super rapid fire, but let's plow through some of these other topics that I had here. The initial assessment. So after kind of understanding the Profit First for Contractors system, it gets down into doing this initial assessment. Talk about that and how that works.
Yeah, so Mike Michalowicz wrote the original version of Profit First, and then I stole it from him. I didn't steal it from him. I called him and said, hey, I need to write this book for contractors. Here's a couple things I will change. And one of the things that I changed is in the initial assessment. So what it basically says, the initial assessment, you're going to take your total revenue, and then you're going to subtract out from that number your materials and subcontractors. So really what that is that's the money that just goes right back out the door. Yep. Right. We buy some materials inside. So what's left, what Mike calls is your real revenue, meaning that's the amount of cash that you are actually managing day to day, because materials and subs, that money just kind of flows right through the business and then goes right back out the door. So that real revenue is what we're going to use to base certain percentages, certain rules of thumb of where you should be. So if you're a $500,000 company, for example, this is in figure 7 in the book. If you're 0 to 250 for your real revenue, then you're going to want your net profit, for example, to be 10% of that real revenue. And I've given some, 250 to 500, it's going to be a different percentage, and so on and so forth. Up to, if you're a $10 million to $50 million company, then you want your net profit to be 20%. Now, remember, that is 20% of this term we call real revenue. Got it. This is the difference for Profit First for contractors. Because our materials and subcontractors can vary from project to project, I didn't want to have contractors to have to go in and figure out, okay, well, I just got a $50,000 deposit check. How much are my materials and subs, and do that calculation. So I go through there and translate that real revenue to what I call a percentage of total revenue, or PTRs. So, for example, you had said 5% net profit. So we get oh man, I'm going to have to do math in my head. I better keep it.
I got you. I got your back.
All right. So we get a $10,000 check, and we know that we want 5%. 500. Yeah. So we're going to set $500. $500 is going to go into our profit account. And then we're going to set 10% aside for owner's comp. So then $1,000 is going to go into the owner's comp account, and we're going to split this up based on certain percentages. So that's where the initial assessment is going to tell you where you are right now.
Right. And if I'm I'll take kind of my 2018 numbers, and I'll be able to plug those in. And what was super interesting when I read the original Profit First book before reading your book, I was eager. I'm like, well, I wonder where my business falls. How am I doing as far as percentage goes? So it's the same thing for, if you, once you understand that, when you get to the assessment, you can plug in your numbers and how far off are you from where you should be when it comes to owner comp, when it comes to the net profit, when it comes to these different calculations.
Yeah. And what's really interesting, the questions I get a lot of times, and this happens every now and then, is that you'll have contractors that are actually doing pretty well. They're generating some good revenue, and they're actually paying themselves a good salary. But we'll take a look at it and they say, well, I still don't have any money in the business. I'm doing okay. My bills are getting paid and we're living pretty comfortably, but the business still doesn't have any money. And I'll go in and take a look and say, okay, you're drawing out of the company, for example, $120,000 a year. So if just based on some Profit First stuff and some rules of thumb, I would expect you to be at a $1.2 to $1.5 million company. And I take a look at the numbers and they're like, oh, you're doing about $1 million or $900,000. That's one reason why you don't have any money. You have an overcompensated employee, meaning that if you're going to pay someone, let's say $120,000, I would expect them to generate a revenue to the business between 1.2 and 1.5. Same thing as like a salesperson that you had working for you. Mm-hmm. If you paid them a certain amount, you would expect them to generate a certain revenue. And so sometimes going through the initial assessment, the owners are actually overcompensating themselves. It's rare. That's usually not the problem, but that is one problem that will pop up. It's saying, hey, we're doing pretty well. Yep, you're pulling too much money out of the business for the volume or for the margins that you're doing. Got it. So for those of you listening that you're intrigued by this, get the book, start reading through it. But then when you get to the initial assessment, that's when it's going to start really clicking. And then like one of my clients the other day, he started reading the book and he's like, talk to him the next time. He's like, I've opened those accounts up. I'm like, that a boy, take action, right? That's another huge part of this is if it makes sense, if you're legitimately struggling with your cash
flow and you're man, where is this money going? Where's that money going? This is a solution that just makes it super simple, not dumbed down. It's just a simple, elegant solution. I don't know if it said it in the book, but it is. I've followed Dave Ramsey's stuff for a long, long time, and people can kind of pick it apart. Well, this and that, but it's practical. It's proven. It's simple. It's effective. I see. Go ahead.
It's what contractors are already doing. I know they're checking the bank account. So all we're saying is set up different bank accounts and check the ones that you're really concerned about. Meaning, do I have enough money to pay my bills? Look at your OPEX account. The reason that you're in business is to make a profit. We don't touch the profit. And when you make a profit, we don't touch the taxes either. And so people say, well, how do you know? How do you know what my taxes will be? And this is what really gets CPAs all riled up. I'll just say, take a look at your 2018. If hopefully you've got your 2018s getting ready to go. But even if not, look back at 2017, for example, and take a look at your total revenue, and then take a look at your total amount of tax that you paid either for the business or you personally. And it depends on what kind of entity you have set up. But in general, just take that number that you paid the government in taxes and divide it by your total revenue. That's your percentage that you should set aside. And let's say, for example, that percentage is 7%. I'm just making that number up. But this year going forward, so we start at 7% setting that aside because that's what we did last year. But this year we say, you know what? I hope that we do better. I hope that we have increased revenue, and I hope that we're even more profitable. Guess what? You're going to pay more in taxes if you're more successful. So if it was 7% last year and you have a plan in place to do even better this year, bump it up to 8%. And if you overfund that tax account at the end of the year, and when you pay your taxes and there's money left over, do you know what we call that? That's profit.
Ding, ding,
so
ding.
Then you take that money out of the tax account.
I thought you were going to have a much more creative or interesting.
No, I thought it's simple. I'm not going to make it complicated. Okay. When there's money left over after all of our bills are paid, then any money left over, we can say, oh, well, that's profit. That just goes into the profit account. And then we actually pull the profit out of the business to reward the owner.
Sounds like a much better plan than I'm just going to kind of keep piling it up there and I hope there's enough at the end of the year.
Yeah, and I'll wait for my CPA to tell me how much. And CPAs will, Sean, that's not how you calculate your taxes. It varies for everybody else. I'm like, yes, I know. It is complicated, and that's what your job is to figure out to the penny what it actually is. But day-to-day operating my business, I just need to realize that I just got a $10,000 deposit check. Some portion of that check is actually not mine.
Right.
And I'm going to calculate an educated guess. I'm going to stick 6 or 7 or 10 or whatever that percentage needs to be for taxes. I'm going to do the same thing with my profit, owner's comp, and then, I only have X amount of dollars left over to operate the business. That's not enough. Let's do something different.
Bingo. All right. So rapid fire, give me kind of your 20, 30-second answer to forget industry standards. What do you mean by that?
Yeah, everybody knows that a contractor is only allowed to mark up their work by 20%. That's just the industry standard, right? Right, exactly. And most contractors don't understand that a 20% markup is 16.7% margin. And right there, that just blew a lot of them away. I know that your clients that are pretty active in your community, they understand the difference, but that is one thing that they struggle with. So what I say is you have to forget industry standards. You need to charge. Here's the standard that you need to establish for your business. There is no such thing as a fair price, meaning that whatever your clients pay for your work is fair because they agreed to pay it. Now, if you tell them you're going to do something and you don't do it, obviously that's immoral or unethical. I'm not talking about that, but the price of your work is the price at which you sell it at. It doesn't matter what anybody else is doing. Now, again, you're going to have some competition if they can compete, produce value and give you the experience. There's certainly some price points, but I'm just saying most remodeling contractors, especially, but this even applies to custom home builders and even subcontractors or trade contractors as well. In general, your markup needs to be somewhere between 35 to even more than 50%. And that blows people away because they think that the industry standard is 20. There are no industry standards.
Everybody, and frankly, the way I like to look at it is literally every remodeling business out there should have a different markup. What does that mean? It means, what do you need to charge to pay all your bills, to make the net profit, to to pay yourself. Everybody's business is different. Some people are lean. They don't frankly need to charge as much to make this a similar amount. They still could. Maybe they're even more profitable. Other ones have a bigger overhead. They've invested in the showroom. Everybody's number is different as far as what their markup needs to be. Go figure it out. Go do the calculations, and the numbers don't lie, right? Figure it out. Good. So industry standards. Destroying debt. Give me your punchline on that.
Yeah. So the best way to get out of debt is to run a profitable company. That's it. In order to get out of debt, there's no tricks. There's you can't borrow your way to profitability. So what we teach in Profit First is when you do make a profit, then you take 99% of that profit and put it towards your debt. And, people will do the Dave Ramsey thing, which I agree with. You do the debt snowball smallest first, and people talk about interest rates. And Dave's great at saying that if you were concerned about interest rates and math, you wouldn't have gone into debt in the first place, which is a great line. But we take 99% of the profit that's generated and apply it towards the debt, and we just have to knock it out. And sometimes it feels long, but if you get really focused on that, then it will disappear much quicker. Now, people say, okay, well, 99%. Well, what do you do with that other 1%? You go and you celebrate, because it's a long, hard process to get yourself out of debt. So you take that 1%.
Take the wife to Wendy's, folks.
That's right. And that's why I say it's gonna start out with a cup of coffee.
Yep.
But then it'll be a lunch, then it'll be a dinner, and eventually it will be a vacation.
Yeah.
I've had more clients contact me and say we were able to take a vacation after doing Profit First for 6 months, 9 months, or whatever. They've gotten out of debt and they paid for the vacation in cash.
It's awesome. It's February 26, 2019, and times in this industry are pretty good. We're riding a pretty nice wave of things, and who knows what the rest of this year is going to be? Who knows what 2020 is going to be? But we've been in a pretty good groove. Now's the time that we should not be getting fat and happy. Now's the time that we should not be, spending $35,000, $50,000 on a new truck when we have other debt, or I got money for this new piece of equipment. Now's the time to kill the debt, build up some reserves, and there's a reason this phrase "cash is king" has been around for a long, long time, and that's because when you're strong on the cash flow, you can weather the ups and downs. So just destroying debt, I couldn't agree anymore. And the more that you and I can emphasize it to our clients, the more people hear it, the stronger their business is going to be, and just the more financial. Is Dave Ramsey going to sue us if I say financial peace? The more financial peace that they're going to have. It's true.
Yeah. And so that people say, oh, well, you never borrow money. And I say, well, no, not necessarily. There are clients that I worked with, and we took a look at putting together a plan for purchasing, like a CNC machine or a shop or whatever. But that's because we took a look at their proven system, their business of generating a profit, and said, okay, we can put this capital, this profit at risk in this way, and this is our payback, and this is the return on investment, and we want to fund this capital investment through financing or whatever. But we did that first because they had a proven method of generating profits. So the profits that were generated from the operations of the business are what we're paying, what we're financing that. So some people say, oh, well, you borrowed money, technically. I say, sure, technically you're right, but we only did that because we had a proven model of generating profits. We didn't say, hey, let's go out and borrow.
There's a plan,
exactly. Right? We actually had a business plan going forward. And then if at any time that business plan didn't pan out, then we had our contingency plans.
Good. So I think we'll kind of start wrapping up here. The biggest thing I'm always doing in these podcasts or in anything that I put out there is just trying to get clear takeaways for whoever was listening to it. The reason I want to do this with you is, frankly, the reason I picked up the original Profit First was because I heard several of my clients, hey, have you read this Profit First thing? Have you read this Profit First thing? And then you worked your butt off and put together this book and customized it for contractors or modelers. The takeaways for me, and I guess I just wanted to ask you, what would you want people listening to this to take away from this? The takeaways for me is that understanding your numbers in this industry is stinking hard. The reason it's hard is because it's hard. Compare it to other industries. You've got money coming in, going out. Just frankly, the remodeling contracting industry as a whole, I'd stack that up next to any other small business. You tell me something that's more complicated when it comes to I need to market, sell. I've got employee issues. I got trade partners that I'm got relationships with. I'm going into people's homes and tearing things up. There's unforeseens. I've got permitting and approvals to deal with. It is a complicated business to start with. Secondly, the money side of it is, other than, manufacturing is also pretty tricky numbers wise, but the remodeling and the contracting industry, it's tough. So we need to, number one, takeaway, you've got to understand your numbers. I don't care if that means going to a local school. I don't care if that means going to one of your colleagues and saying, it seems like you know your numbers. Can I sit down with you and just study this with you? There's resources everywhere. First, you got to raise your hand and say, I heard this Kyle guy and this Sean guy talking about, and I've heard it from many other people, that it is so important that I understand my numbers. If now maybe this recording may be the time that you finally take that super serious. Or if you're kind of understanding your numbers, maybe you take this to say, you know what, if I'm going to be excellent, if I'm going to provide for my family and my employees in a big way, I've got to understand these numbers like the back of my hand. That's probably the biggest takeaway I want people to hear. And then secondly, hey, if that's you, like this Profit First system is very attainable as far as following it and implementing it. So what are maybe a couple takeaways that you'd want people to have, Sean?
Yeah, so I'll give you the takeaway that I tell people at the end of the first chapter. Is really just making the commitment. So at the end of the first chapter, when I kind of have punched people in the face with what I describe as the craftsman cycle, I've had so many people reach out to me and said, you are describing my life over the past 5 years, 10 years, 3 years, whatever it is. So at the end of the first chapter, I say, you just have to make the commitment. And what I want you to do is send me, you got to pick up the book and read it, but you're going to send me an email. I'll give you my email address there in the book. Not right now, but you have to read the book in order to get it. And just say, I want to break the cycle. I want to break this craftsman cycle. And so I'll let you dig into what that actually is there in the book. But the big takeaway is just go set up a profit account. If you do nothing else, go set up a separate account and take whatever balance that you have in your bank account right now and move 1% into your profit account. You will not miss 1%. And then if you don't implement anything else in Profit First, I want you to, it's going to completely change your business, but then just increase that 1% over the next few quarters. So it's 1% now, 2%, 3%. You are not going to miss 1% of that money every quarter. And by the end of the year, you'll be at 3, 4, 5, 6% profit. Don't touch it. It's guaranteed. If you don't touch it, it's guaranteed to be there. And you're not going to miss it 1% at a time. And for a lot of you contractors out there listening, the end of 2019 can be your first profitable year in business. And it's really that simple. So if you do nothing else, just go set up a profit account, move 1% over for the rest of this quarter. And then next quarter, every time you get a check, and we get into the details in the book about how to systematically do that. So you're not running to the bank or whatever every couple of days when you're getting a check. But on the 10th and 25th or twice a month, move 1% of the income that comes into the business over the profit account. You will not miss it. It will force you to run a better business. And at the end of the year, you will be profitable.
Love it. Love it, man. I appreciate the effort that you put into things, the amount of content that you put out there. It's obvious, there's coaches, consultants out there. I hope and pray that I'm in this camp too of, we've got a business to run. We've got a family. You got 5 kids. I can't imagine.
Yeah, 5 kids.
I got 4. Hang on. My client, I don't know why he's dialing in. He's got a meeting at like noon. He must have clicked the Zoom call. I had to put him out there. Although, darn it, that would have been awesome.
I was about to say.
I just booted him out. It would have been excellent because he's one of my clients that's been embracing this Profit First thing. If he clicks back in, we'll let him. Yeah, let's jump. Have him jump in. I missed an opportunity there. But what I appreciate, and I hope I'm in this camp too, of like we've got a business to run and we need to provide for our families and whatnot. But a huge part of what I've tried to do over the 11 years I've been doing this, what I see that you're doing is, the more that you give, the more that you teach, the more that you educate, the more that you share ideas and try to motivate and try to encourage, the business will come. That'll take care of itself. I have a passion. I think you have a similar passion of just you want to help this industry. That there's a ton of guys and girls, men and women out there who are working their butts off. The reason I love this industry is because it's full of really, really good quality people. You can't be a good remodeler or a good contractor and not not want to help people and not, be a certain type of person. And man, the business side of it is tough. You can be great at what you do, but you've also have to be a great business person. And I appreciate it. I just wanted to thank you for what you're doing for the industry. Frankly, you've impacted a lot of my clients. You motivated me, got me fired up on certain things. So keep on keeping on. Appreciate the effort that you put into writing this book. And for everybody listening, go pick it up and go buy it and make Sean the $2.52 or whatever he makes per book.
Yeah. It's big time. I'm like I said, I think we'll be able, if I sell a couple more 1,000 books, then I will be able to take my family out to Wendy's and get that, we'll get the large fry,
right.
with that. So
right, man.
Thank you,
I appreciate
Kyle.
it. And share again the URL they can go to.
Yeah. They can go to profitfirstcontractor.com, or they can go to SeanVanDyke.com and find all of that stuff. And Sean Van Dyke is spelled ShawnVandyke.
Awesome, man. Thank you so much for your time, man.
Thank you, Kyle. Appreciate it.
Take care. Are you on Instagram? Boy, there's a lot of people on there. Perhaps some ideal prospects of yours, some previous clients. It's also interesting to follow other remodelers on there to kind of see a behind-the-scenes look at their day in and day out work. I'm on there as well, hence why I brought it up. If you go to Instagram.com/Kyle Ryance Hunt, Kyle, K-Y-L-E, Ryance, R-Y-E-N-C-E, Hunt, H-U-N-T. Kyle Ryance Hunt. Look that up, follow me on there, and look forward to seeing you.